All right, welcome to the weekly prep video for the week of June 16th to June 20th. In this video, we'll take a look at what happened in the market last week, go over the indexes, leaders, ETFs, complete list of industry ETFs, and then take a look at some long and short setups going into next week. I apologize for not getting out a video on Thursday. I was traveling home so I could see my father for Father's Day. So we'll be doing these videos from my parents' house over the next couple days. All right, let's jump into it. We have indexes. We'll go QQQ starting off. We had our, what would it be, fourth distribution day since kind of this rally off the 10-day moving average. Gap down on Friday, closed below the 10-day moving average. We actually had a good intraday rally on Friday where we gapped down, had a good rally in the morning, but eventually we had more news breaking out about the war between Iran and Israel, and we closed lower in the session. So still above the 20-day EMA, but we do have our first close under the 10-day after the May 23rd gap down, which was immediately resolved higher. So we'll see if we have kind of a similar reaction here, where after this gap down and we close, we gap up and reignite the uptrend, or whether we're going to be under some more pressure, maybe a test of the 20-day EMA this week. And last week, QQQ ended the week down 0.6%. SPY, similar action, closed just below the 10-day EMA with a gap down, closed near the low of the day on Friday. End of the week, down only 0.4%. You can see we just chopped sideways and eventually closed weak on Friday. IWO, that's the Russell 2000 Growth ETF. Pretty gross looking action on Friday. I was really hoping this wouldn't happen, where we get a couple days trading over the 200-day moving average after a nice rally up. And then we followed it with a Thursday gap down and a Friday gap down, test the 20-day EMA and closed right near that. We didn't want to see this because this is basically an uppercut and failure of that 200-day, a key moving average, which has been flattening out. Hopefully, we reignite this uptrend right away. We don't want to be spending more time under the 200-day if we can help it. If we do, that just means, at least for my trading, typically with growth stocks, you're going to have a more choppy environment, uh, more buy weakness, sell strength versus buying strength and trying to hold on for a much longer move. So we might be under some pressure the next couple sessions. ARKK still extremely strong. We opened on the low on Friday with the gap down, closed near the high of the day, back over the 5-day moving average. Actually positive for the session, up 0.3%. Ending the week up 1.9%. Great action overall. Really would just like to see Friday's low hold in any more turbulence. But the more we can chop here, let that 20-day moving average catch up, we could get a really nice, just kind of 1 to 2 week base here and then get going again. And then Bitcoin back under the 20-day EMA, trading a little bit weaker. Potentially, this is a lower high now, and then we'll see if we confirm lower during the week. Otherwise, this is just more consolidation before an eventual break, up or down. Next, we'll take a look at the leaders. So we got 9 stocks here. I did kick out Carvana, so let me jump to that one first. I switched Spotify in for Carvana. Carvana had been a market leader, acting great. We got a little bit of turbulence at the beginning of last week where we closed a little bit lower, testing that 10-day EMA for 3 different sessions. Eventually on Thursday, we got some news that insiders were selling. We gapped down, sold off on heavy volume to the 20-day moving average, down 6.3%. And how we responded after that was going to be really important to me because we typically see these ugly kind of closes near the 20, slightly below the 20-day moving average as shakeout zones if we gap up or follow through to the upside immediately after that. But we got more weakness instead of a bounce there. We got a gap down under the 20-day moving average, closed near the low of the day on even higher volume, down another 6.8%. So Carvana last week down about 13% and losing the 20-day moving average because there's stronger stocks in the market. We're going to kick it out of the leaders list and add Spotify instead. But let's take a look. Let's filter by last week's change and go from there. SMR, nuclear stock, continues to be a great name, up 12.8% last week. Little ugly close on Friday, closing near the low of the day, but this is a red candle close on tiny volume above a rising 5-day moving average after a couple explosions higher. To me, this is just set up to move even higher, looking for a gap up on Monday as a potential entry versus the 5-day moving average to add on to the position. Palantir had new closing highs on Friday. Good, great relative strength. We opened with a gap down, but then we closed, like I said, at new closing highs back above the 5-day moving average. This is kind of the candle that I was showing with Carvana, where we had an ugly close near or below the 20-day EMA, but we followed it up with a gap up instead of Carvana following through to the downside with a gap down. And that's why Palantir stays on the leaders list, because when it gets tested like a June 5th day and responds in this manner, that's how leaders respond. And that's why it deserves a spot on this list. Ending last week up 7.6%, not doing anything wrong. CRWV continues to bounce between the support gap and 10-day moving average and the upper resistance gaps. We have two gap downs now, and that's just showing that this is consolidating after a 200, 300% move, whatever it was, from $41 up to $166, actually closer to a 400% move. But either way, very, very strong stock and just consolidating, bouncing between these two zones. What we want to see is a close either above the resistance gaps to really reignite this for a move higher and then potentially a blow off top. But if we start to close below the key moving averages, like the 10-day moving average and these two gap zones, that's more of a sign that, hey, the market is in risk off mode. It's time to scale back exposure, take some profits on maybe not your core names, and then just look to play a little bit more defense as we can kind of continue to chop or correct here. So using CRWV as a way to just feel out the market. And then that's what we do with all of our leaders, but specifically CRWV has been a really good risk on or risk off indicator lately. So we'll see what direction that breaks. CRWV, this is CrowdStrike, one of the leaders in cybersecurity, had a gap down on earnings. And instead of continuing down, we held the support gap, held the 20-day moving average on a closing basis this entire time, put in a higher low, rallied up to this resistance gap. Unfortunately, had some selling into that area, but still closed above the 5-day moving average on Friday. Great relative strength, liquid name. This is something that I'd be watching for a higher low pullback into the 20-day moving average as a potential add spot. Roblox continues to be just a monster, simply a monster stock, trading above the 5-day moving average in a very clean uptrend. Anytime it comes under pressure, it gets supported at the 10-day moving average. We didn't even get to the 10-day this past move, but confirms this support gap with our gap down. We tested that zone intraday, closed above it. Another stock that closed at new closing highs, ending last week up another 1.5%. Spotify, that's the new name to the watch list. Really good stock to buy on weakness. You can see we undercut the 20-day moving average and support gap on May 12th. That was my entry point right there. Since then, rallied up, a little VCP pattern before a breakout. Last week, we had a little test of that support gap zone just above the 20-day moving average that responded well, closing back above the 20 and the 10-day. Some tight action and a good close on Friday, closing near the high of the day, actually up 1.17% and ending the week basically flat. ZS, extremely strong action, similar to CrowdStrike in that cybersecurity space. But you can see the closes are very close to the open of the last couple days while we're closing over the 5-day moving average and these two gap up zones. Great sign of relative strength and definitely a stock that I'll be watching next week. GEV, we had a lot of energy stocks actually showing great relative strength last week. This one, a little relative weakness, came into the 20-day, held that on a closing basis, higher low the next day on Wednesday. And then Thursday, Friday, just kind of traded down a little bit. This actually does have a gap down that I should have drawn here. So let me get that drawn. Slight gap down on Friday, and our first gap down zone of the move higher. So we'll see. Watching this for a test of the 20-day EMA and support gap. If we can hold that on a closing basis, then this could just be kind of forming maybe like a 3 weeks tight base, or a little bit longer, but still not overly concerned about that stock. And then Robinhood, great close on Wednesday, closing over the gap down zone from the S&P 500 inclusion snub. And then not great closing range on Friday, but still closed over the opening price, still closed over the 10-day moving average. Ended last week down 3%. But still, if you're closing over the 10-day moving average and you're the leading stock in the market, personally, I think Robinhood is the liquid leader of the market right now. It's going to be a name on your focus list, and you got a really nice spot to watch it at. All right, so next we'll go over the ETFs. Usually we do the recap, but because this is the weekend review and prep for next week, we'll go to ETFs and go through this in full detail. I've ordered this by the percent change of last week, so you can see where the money was flowing, what industries were getting the money, while what industries were hurting the most. And at the top of the list, it's all energy stocks. Different types of energy stocks, but energy is the theme to focus on. XOP, oil and gas exploration, up 7.7% this week. We reclaimed the 200-day moving average. We were talking about this as a weak group because it was nowhere near its previous highs, while other groups were acting that way. We tightened up here and then had a gap up after a close under the 20-day EMA. That's usually a sign that the consolidation or pullback is over with and you're going to start a new uptrend, especially if you close well on that day. And that's what we had, just great action from that point all the way up to the 200-day moving average and this resistance gap. NLR, that's the uranium and nuclear ETF, continues to ride the 5-day moving average. Anytime we consolidate, we touch off the 10-day and get supported there. That's what leading stocks and leading groups do. So another close over the 5-day moving average, basically closing flat and up 5.6% last week. XLE, another ETF that tracks energy, that's the energy sector, up 5.6%, closing right at the 200-day moving average. Another group that was weak, we get this gap up on June 6th, and that reignites the uptrend. Gold, GDX, gold miners, new closing high on Friday. We pulled into the 10-day EMAs last week, followed it up with two big gap ups after the war broke out. Thursday up 3.1%, Friday up 1.8%, ending the week up 5.5%, and new closing highs. Definitely a theme to be focused on. And one of my warning signs for the market is whenever the solar ETF TAN is starting to act well. And unfortunately, for me, it is starting to act well, up 4.3%, reclaiming the 200-day moving average. Huge candle on Friday, opening near the low below the 10-day EMA with a big gap down, closing right near the high. Up 2.4% on Friday, but if I have the 5% from open here, no, so let me measure it really quick. So from our open, up 4.5%. So lots of strength in solar on Friday. We'll be covering that in the daily recap tab. SMH semiconductors, also some good relative strength last week, up 1.7%. We did get a gap down on Friday and close under the 5-day EMA, but we're still above the 10. Last week, we had a strong rally to close that gap down from the DeepSeek news back in January. So that's a good sign of relative strength as well. As long as we hold this 20-day EMA and the gap zone at 250, I still think that this is more of just a consolidation before a higher move. XME, precious metals, great action, up 1.5% last week, close over the 5-day EMA on Friday. More of a risk-off type ETF or industry. So as war news comes out, it makes sense that that continues to run higher. XLV, healthcare ETF, actually showing some relative strength last week and the week before after what really was an ugly rally attempt at the end of April and the rest of May. You can see we actually made new lows on May 15th. But last week, good action through the 50-day moving average, rallied up into this resistance gap. There's potential that this is just a bounce and we're rallying into a resistance gap. So a gap down on Monday and some follow through to the downside. And this could just be another lower high. Still not a group that I'm going to be focused on for individual names, but I'm glad to see some life in this and not heading lower. IGV, this is the software ETF, rallied up to the resistance gap from highs on Thursday, lower highs, lower lows, but still closed above the open on Friday, closed at that 5-day moving average and still over the support gap zone. So again, looking at that 20-day as the line in the sand, this could just be a pivot retest at 104 and then a potential higher low before we make new all-time highs, hopefully. XLY, consumer discretionary ETF, weaker at the end of Friday, closing under the 20-day EMA. This could still just be a couple week base here, so don't want to overreact. If we lose the low of the pullback and the 200-day moving average, that would be a little concerning to me. But again, this is a group that I don't typically trade too much in. ITB, Home Builders ETF, was having some strength earlier in the week, but you could see big resistance or big rejection at this resistance gap, ending that day down 1.7% after a gap up. A good bounce on Thursday off the 50-day, giving some life, but we followed that with confirmation to the downside with another gap down, closing under all the key moving averages, and ending the week down 0.3%. XLB, the materials ETF, still over the 20-day EMA, another group that doesn't get my attention too often. But above the more groups we have over the 20-day EMA, the stronger the market is overall. So want to keep that over the 20-day. KWeb, keep thinking that China might be getting some money flow, but it's still in a stage one base. Really, once we break over $38, that's when a stage two uptrend can really ignite. But first test would be getting over 35.30. Until then, it's really not a group that I'm watching. ROBO gap down on Friday, closed under the 10-day, still above the 200-day. As long as we hold kind of this pullback low area, 54.80, I think that the group is fine overall. XBI Biotech ETF ran into this resistance gap after uppercutting the previous highs in the rally. Since then, we've pulled back a little bit into the 10-day, still closed above it. And we have this nice support gap here. So potential for a higher low here if we get supported at the 20-day EMA. If we lose the support gap and the 20-day, then this can come under some pressure, down 0.8% last week. XLP, this is forming a pretty long base here. Which direction we break out to is going to be a good signal for the market or a clean signal for the market. Not sure if it's good if it breaks to the downside, but that's what the action looked like on Friday. We attempted to rally into this resistance gap, got rejected right there, closed near the low of the day at the 200-day moving average, which is now flat to declining, under the 50-day, which is now declining as well. So we'll see which way this base breaks. ITA, this is the Aerospace and Defense ETF, had been in a frozen rope rally above the 5-day, getting corrected at the 10-day. Had some turbulence midweek last week, Tuesday, Wednesday, some weak action, but we did bounce at the 20-day. Then we spent Thursday and Friday just tight trading over the 10-day moving average. As long as we hold the low from Wednesday, I would consider this an uptrend still. CIBR, cybersecurity ETF, closed under the 10-day on Friday. Basically just chopped sideways for another week, down 1.5%. But the two leaders in that group, CrowdStrike and ZS, still showing great relative strength, and those are the names that I want to be focused on. IYZ Telecommunications, ugly close under the 20-day EMA on volume on Friday. This is one of those kind of tests that I want to see how this responds. Do we respond with a gap up and a rally, and this is just a nice shakeout zone? Or like Carvana, are we going to follow through to the downside, and then we have another group that's losing its uptrend? IYT, lower high rally into the 20-day or 200-day moving average, which is flat to declining. Friday, gap down, lost the 20-day EMA. This is in danger of losing the uptrend at this point, and we don't want to see more groups break into the downside. Fortunately, XLF is another example of a stock losing the uptrend. We had a rally back to the resistance gap zone from highs, had a good shakeout to the 20-day EMA, opened on the low, closed on the high on May 23rd. But after that, we just got tight and eventually started wilting lower. Gap down on Friday, losing the 20-day EMA on big volume. So to me, this is now starting a downtrend where we had a higher low, then a lower high, and then if we have a lower low, that would confirm the downtrend. Right now, I guess technically it's still in a basing phase, but with the loss of the 20-day EMA, I'm not sticking around to find out how long this will base. We'll see if we can close this gap down zone quickly. FDN lost the 10-day moving average, closed at the 20-day. Potentially just a breakout retest of this, what, maybe like 2 or 3 week base here and the 20-day EMA. We'll get more feedback on Monday or Tuesday with that. BLOK, this is looking a little bit more dangerous now. We uppercut the previous highs, immediately sold off, then rallied, put in a lower high, and then we lost the 10-day EMA on Friday. The 20-day and the gap up zone at $49 is really the line in the sand for me, but a little bit more weakness. That group down 2.9% this week. PEJ also down 2.9%, lost the 20-day EMA on a closing basis on Friday. Entertainment had been one of the groups that was leading, but we've had three unfilled gap downs all last week, losing the 20-day EMA on some volume, not ideal action. If we can gap up, I would still consider this in an uptrend. But if we follow through to the downside, I think we lose another group. And finally, the worst ETF last week was XRT, the retail ETF. We rallied big time into this resistance gap back in from February 18th to 19th. Immediate response to that level with a ugly close on Wednesday, down 1.3%, bringing us back to the 5-day. We gapped down and lost the 10-day the next day. We gapped down on Friday, so 2 gap downs in a row after a resistance gap test. We lose the 20-day and the 200-day moving average. We really need to hold this support gap and immediately respond to this level. Otherwise, this is unfortunately another domino to fall, and the market more signals that the market is under pressure. We're in a low probability environment or risk off environment, and just assigned to play defense. You don't have to argue with the market. You could just get all these signals, respond accordingly. If the signals change, then you can start adding exposure back to the market. But for now, we saw a majority of the ETFs down last week. We saw some leaders had to be switched out, Netflix and Carvana last week. So the market's coming under some pressure. Next, we'll take a look at the daily recap. I broke this up into kind of 4 groups to focus on. First one is nuclear. We had great action out of the nuclear stocks last week. Individually, OKLO on Friday, lower highs and lower lows, but we closed pretty well, only down 1.2%, while the rest of the market and rest of growth leaders were starting to feel some pressure. And we closed over the 5-day moving average. So can't be too bearish about that after making new highs. Wednesday, the stock was up 30%. We gapped down because of an offering on Thursday. That offering was immediately bought, and we didn't follow through to the downside on Friday. So I think this is a stock worth watching and a group worth keeping note of. SMR, we already covered that. Weaker close, down 3.8%, but overall has made new highs, pulling back to the 10-day or gap zone here. While it wouldn't be ideal, I would still consider the stock in an uptrend at that point. So for me, nuclear theme, OKLO, SMR, those are the 2 leaders. The other stock that I would consider, like within that leading group, is CCJ, which after its HV1 highest volume in over a year on June 9th, up 10.8%. We've just chopped sideways, closing over the 5-day EMA all these times, but we haven't closed over the close of that high volume day, so the HVC high volume close. If we get over there, or if we break through this pivot, that could be buyable on Monday. And then of the group, I wanted to point out we always want to be focusing on the leading stocks in the leading groups to improve our odds. We don't want to be focusing on the weaker stocks in the group if we're trying to trade them long. NNE for me is just a sloppy mess of a chart. Yes, we're above the 20-day EMA, but you could see the structure of this chart is much different than SMR and OKLO that's already made new highs. This has not made new highs yet. We've actually made a lower high compared to May 23rd's rally. On Friday, we gapped down, closed under the 5 and the 10-day EMA, near the 20-day moving average, while those other stocks are at their 5 or above their 5-day EMA still. So just kind of wanted to point out the difference between leaders and laggards within a leading group. So we always want to focus on the leaders. Aerospace and defense, this had that big shakeout on Wednesday that we covered in that video. So just wanted to follow up on a couple of those stocks here. KTOS ending the week up 3.2%, even after the shakeout to the 20-day EMA. So great strength here. Um, HWM, another stock that's a little bit weaker, but we held that 20-day EMA on the test on Wednesday, closed well, open on the low, close near the high on Thursday, and then really tight action. So we have like a 3-4 day pivot right at 172.50 as a potential entry on strength there. Now, we talked about the solar ETF, TAN. Within that group, I wanted to cover some stocks that are actually setting up pretty well. And that's what makes me nervous when solar stocks set up, because historically, that's when our previous rallies have come under pressure. But leader of the group, in my opinion, is NXT. This was an IPO in 2023 in February. We're right near highs now, so blue skies ahead. Solar pun right there, which is acting really good. No gap downs to work through. Held the 10-day EMA on a closing basis, except for one day, which was right on it, and we followed that day with a breakout to up 4.9% before a pullback. It does tend to trade a little bit choppy, so it's something that I would be looking at a couple tight days here and then a shakeout as a potential entry at the 10-day. But NXT definitely a solar stock that you want to keep on your watch list. SEDG, a stock that I love trading to the downside after. It's honestly like a picture perfect stock to learn stage analysis. You had your stage two uptrend, your stage three base that happened over multiple years, and then you broke that stage three into a stage four gap, a downtrend with a massive volume gap down. And then from that point, the stock dropped from 200. I mean, it was trading at like 300, but the gap down on earnings was down to 200. And then the stock fell all the way down to $10. So no matter how much you love a stock, it can do something like Solar Edge did. And now we've gone through the stage four downtrend. We've gone through a stage one basing phase for about 6-7 months. And it looks like this might be on its way up to a stage two uptrend. And every time I've said that before, the stock pulls back and the market comes under pressure. And that's why I'm a little nervous about this. But we had a good response on earnings, up 23%. Then we had a major gap down on the 22nd, down through the 50-day moving average. But since then, rallied up, got tight at the 20-day, and followed through. Great action on Friday. And we ended up last week up 28%. So definitely a stock that I would want to keep on my watch list. Friday was a potential entry point. Now I'm waiting for some tight action or a pullback to get into the stock, but it's a stock that does trend well in both directions. So now that we've gone through a basing phase, if it can get going, it's had multiple years of selling off, potential for a quick stock to move higher. End phase, the weakest stock in the group, in my opinion, just rallied up to the 50-day moving average on Friday. Weak close, still under this resistance gap. So kind of similar to OKLO, SMR. Those were the two leaders of nuclear. I think NXT, First Solar, which you could see is at the 200-day moving average, and SEDG might be the leaders in solar. ENPH is kind of like NNE to me, where it's still in a downtrend, not above key moving averages. Haven't really given us a reason to get too bullish. No high volume gap ups, nothing like that to get us excited about this stock. So if we're focusing on solar, we want to focus on the leaders. And then final stock or theme I wanted to focus on was oil and gas. Overarching theme this weekend has been energy, energy, energy. Those are the groups that had the most relative strength last week. Those are the groups that I want to be focusing on next week. LEU up 13.4% last week, two gap ups on what was this? On Monday and Wednesday. Pull back into that area would be a potential buy point. Beautiful double bottom base, little handle here before a gap up. Great action since that gap up. So any kind of pullback here is something that I would look to buy. CRK, beautiful base, broke out, got tight in this like flag pattern or still a base pattern above the breakout point. Followed through on Thursday to the upside. Some volatility, but still closed well over the 5-day moving average on Friday, ending last week up 3.5%. And then EQT, this actually had a shakeout earlier in the week, below the 20-day moving average into the support gap zone. This is why I draw the gaps. They tend to be where pullbacks get supported, where rallies get sold off. So we got supported on this gap, followed it with a gap up on Thursday and strong close over the 5, the 10, the 20-day moving average. And then we followed through again on Friday, up another 2.5%. And now this looks to be breaking into new highs shortly. So now we can jump to the long setups. We'll go long setups, short setups, and then call it a video. First, we got KRMN. This is an IPO in the aerospace industry. So a leading theme in the industry. IPOs and leading themes can turn up and run pretty nicely. We had a quick base, undercut that base is low, shaking out all the weaker hands, rallied up into new highs, and since then has been basically supported at the 10 and the 20-day moving averages on any pullbacks. We have like a 3-day pivot here, if you don't count Friday's high, 3 or 4 days where we've rallied, but we haven't closed over that zone yet at 47.60. So a move through that area is a potential entry with a stop at Friday's low, the 5-day EMA. Maybe give it a little bit more room to the 10-day, but whenever I trade IPOs or like more performance booster names instead of core positions, I try to get in and be right away. If I'm not right and not getting traction right away, I'll just toss it back, kind of protect my risk. But leading theme IPO has the potential for some nice gains. Robinhood, like I said earlier in the video, liquid leader in the market, according to myself. I did buy this on the gap down on Monday, right at that 68.50 area when we punctured the support gap zone. Another pullback into that area with the 20-day moving average. That is my like bread and butter setup for liquid leaders. The first time they pull back to the 20-day EMA after making new highs, if you can align that with a support gap, it's a must buy zone for my system, for myself. Because you tend to see shakeouts into that area, just undercut and reclaim it. And then that ends up being like the pullback low. So I'm going to be laser focused on Robinhood this week. That 20-day EMA support gap right at $68 is going to be a key spot for me. NRG, I tried this on Wednesday, got stopped out because we got an ugly close under the HVC and the 20-day EMA. We gapped up to start the day. So that's my ugly close followed by a gap up through the 20-day EMA. That's usually a trigger for like that's the shakeout. Now we're moving higher. But we didn't quite respond as well as I'd like. We did close back over the HVC the next 2 days. So we have this 3 days of highs right at 152.20 as a potential pivot to buy through that zone. You'd also be buying through the 10-day EMA as well, and then just use your stop under the pullback low. Spotify, new to the leaders list. Just watching this 20-day EMA and support gap area as a potential add spot. We've seen historically it responds to these support gap zones and these key spots under the key moving averages. So really watching for the market to come under pressure, this to come under some pressure. That 464 area in that support gap is the key spot for me. EAT, this was a monster stock last year for me. It trends super cleanly above the 20-day moving average when it gets going. One of my big winners at the end of last year from 68 up to 130 before any distribution. So it's a stock that I've had some success with now, formed a later stage base because we've already made a really nice move. So a little bit more volatility in the space, not expecting as much or not expecting as clean of an uptrend this time around, but we're starting to base out here, letting that 20-day EMA catch up to the lows of the pullback. Now, I'm just watching for an undercut of the low of that gap zone and the 20-day EMA right at 166 as a potential entry, and then just use a 1 or 2% stop Because if this is a leading stock in an uptrend that's just having a shakeout, you won't see further distribution after you undercut those zones. You'll see an undercut and a response or a reclaim immediately if buyers are supporting. If they're not supporting it, then I want to get out as quickly as possible with as little of a loss as possible. NBIS, I did buy this on Friday. Didn't close very well, but I still have a few shares using $45 as my stop below the 10-day, below the HVC. So with this, if we get a gap down in the market on Monday or some volatility earlier in the week, a undercut and reclaim of the HVC zone would be my buy spot, and then I would just use a 1 or 2% stop to fill out the position there. CRWV, kind of mentioned this earlier. If this breaks and closes over the resistance gaps, I think this is just another consolidation before another big move higher. These IPO stocks in the type of market that we're in, where we have been strong up until Thursday and Friday, if we just reignite that uptrend, this stock can go way higher than you and I expect. So really looking for a move through 165, but if we break to the downside, then I think it goes through more of a constructive pullback. Snowflake, this has been on the watch list since I started these videos, not doing anything wrong, pulling back to the 10-day EMA, still eating into this resistance gap, but we've got the 20-day EMA and the support gap at a round number of $200. That's been the spot that we've been watching. We haven't tested it yet. That is the area that I'll be watching for next week. NVIDIA, a little bit weaker on Friday with a gap down and close under the 5-day moving average, but we've got a support gap zone under the 10-day, under 140 as a potential undercut and reclaim as an entry point. Otherwise, the real bread and butter, that 20-day EMA and gap up zone at 137.60 is the spot that I am focused on for a larger position sizing area. Broadcom, AVGO, gap down and close at the 10-day EMA on Friday. This could be a potential lower high, and maybe we need more basing, but we got the 20-day and support gap at the same spot. That's just an area that I have to be interested in and have to play those zones because I know studying all the leaders in the past couple cycles, those are the spots that if you can get in with size, you have good risk reward. And if the market falls apart, you get stopped out for a quick loss. But if the market does turn around at that point, that's the best risk reward spot that you can really size up in. OCRL, no clean entry point, but I wanted to put this on people's radars. Huge volume coming in on Thursday and Friday. Thursday up 13.2%. Follow through on Friday with a gap up 7.7%. For this, I'm really looking to see if the market comes under true pressure for like a week or two, coming back into this zone around $200 and the HVC area. That could be a spot where maybe the 5-day or the 10-day catches up. But I really want to see like the market come under pressure and for this to show relative strength during that phase. Otherwise, it's just not a clean entry point, but a stock with big volume, big relative strength lately that you should have on your radar. Palantir, mentioned earlier, we closed above the 5-day moving average, new closing high on Friday. Looking for a shake of the 10-day moving average and the gap up from Wednesday as a potential entry or add spot, and that would be a breakout retest zone as well at 133. MSTR, I tried this on Thursday, bought it perfectly on the undercut and reclaim of the support gap. Thought it was going to work out well because we blasted through the 5, the 10, the 20-day moving average, but we got rejected at the resistance gap. And then on the morning weakness, I actually got stopped out and I didn't rebuy this on Friday. I was traveling, but we closed well on Friday, right at those key moving averages. Now I'm looking for a higher low pullback, still like undercutting the support gap zone or getting in the support gap zone. But then using Thursday's low as my stop, especially if Bitcoin is just continuing to pull back and tighten up. Once we get that confirmation higher, like this is a stock that it has shown multiple times it has the ability to make fast moves, uh, but we want to spot that if it's not going to work, we're going to get out right away and manage our loss. ZS, along with Robinhood, I think this is like my main focus going into next week. super tight action above the 5-day EMA. If you go back and study the leaders, and typically like the thinner traded leaders, not like the Nvidia, Apple, Broadcom, stuff like that, but more like an SMCI. If you study how they acted after their breakout on volume, you'll see these tight closes over the 5-day moving average very often. And once the market pressure lifts, these are the spots where you've had your chance. This is the type of entry that you're going to get on a name like this. So looking for a break over Friday's high as an entry, and then I'd use the 10-day, the pullback low, the support gap area, all as kind of like a key spot to ditch my shares if we break below. CrowdStrike, looking for a pullback into the 20-day EMA and support gap. We've talked about that before. That's just a key spot that I'm watching, um, because this tends to be a stock that I do better with buying on weakness versus strength. And then Dave, stock that has had a massive move already, $5 up to 220. Now we're pulling back into the 20-day EMA and support gap for the first time, and a key spot at round number of 200. So an undercut and reclaim of that zone at 197. That's the spot that I'm watching for. Those are the long setups. Now we got some short setups. SFM, a name that I've been kind of talking about this as a potential failed breakout. Late stage base, a stock that went from $30 up to 160. Attempted to break out a couple weeks ago, immediately reversed, and we've had three gap downs since then, losing 5, the 10, the 20, then the 50-day moving average. We did close above the support gap slice. I wouldn't even call it a gap zone. It's basically just a slice at this point. So watching for a mini rally to the 20-day EMA and the 50-day moving average is kind of uppercut and failure at that area at 165 as a potential entry there. And then I use the gap down zone at like 170 as my stop. MMYT, this has been on the short watch list for a very long time. You have your stage 2 uptrend, your stage 3 topping phase. We've lost the key moving averages. You see a couple dagger bars on volume on the right side of the base here. All were closed below all the key moving averages. All of the moving averages are now starting to creep into a downtrend. A break under today's low or Friday's low at 97.40 is going to be my entry point. We would also be breaking below the support gap, and below the support gap, there's nothing until $76. So a quick 25% decline on the table there for MMYT. SMMT, this was a stock that's been on the short watch list for a while. We had a rally up, uppercut and failed at the 20-day EMA, followed through to the downside on Wednesday through the 5, the 10, the 200-day moving average, and then just tight trading action with a gap down on Friday. Now we have a pivot here at 1920 that we're just looking for a break through 1920 as our entry. Stop would be the 200-day moving average at 2070. DXYZ, we've put in a lower high compared to the rest of the chart. A lot of stocks have been making newer highs. This had some relative weakness. We're not anywhere near the previous highs. We're trading at $47 at this point, $48. The previous highs were at $75. After that high gets put in, the rally point high, we gap down, trade tight, a little bear flag, break to the downside, confirming that downside action on volume. That was when Trump and Elon got into that little fight. Had to bounce back up through the 5, the 10, the 20-day moving average, but gap down, has this resistance gap. Weak action on Friday, back under the 5, the 10, the 20-day. This is one where just like a mini rally up into that 20-day, and then you can get a really tight stop either versus the 20-day, or if you want to give it some breathing room, that resistance gap high. But just feels like a heavy name in the market. WGS, this has been on the short watch list for a while. We finally got confirmation downward after that uppercut and failure of the 200-day moving average on June 10th. Tight trading day on the 11th, followed through on Thursday to the downside, down 5.6%, gap down, and then tight trading on Friday, down another 2.7. This is just one where it can start to waterfall here. So a break below Friday's low would be the short spot. Friday's high, the 5-day EMA would be the cover spot. QMCO, I do have a position in this short. Started that on Thursday. Wednesday, we saw the uppercut and fail of the 5, the 10, the 20, and the 50-day moving average into this resistance gap. Followed through to the downside on Thursday, down 5.2%. gap down, week close down another 4.4% on Friday. And now you have this shelf where we've seen lower high, lower high, lower high, lower high. If we lose this support gap shelf, there is nothing until like $4. So from 10 to 4, this could be a very quick waterfall to the downside. And hopefully we get that move because I have a short position already. And then finally, VSCO, Victoria's Secrets. This is a retail name that hasn't had the same type of strength that the XRT ETF has. We had a lower high rally last week into the resistance gap area. We lost the 5, the 10, the 20 day on Wednesday, followed that with a gap down and closed at the 50 day on Thursday, and followed that with another gap down, and we closed down another 8% on Friday. So this is showing me that this was a lower high in the overall trend, and now this is just back to a downtrend under the key moving averages. So we'll be watching for mini rallies to the 50-day moving average in this gap zone at 1970. Maybe use $20 or the 20-day EMA as a stop. But just looking for maybe on Monday we gap down, we test the support gap, kind of bounce, and then put in a lower high, and just manage our risk against wherever that rally high point gets to be. So that is the market review of last week, some market prep for the week of June 16th to the 20th. I'll be putting out videos Monday, Tuesday, and Wednesday, but then I go on vacation on Thursday and Friday. So no videos back half of this week, but we'll have daily recap videos Monday through Wednesday. If you guys enjoyed the video, please leave a like, subscribe to the channel, and I'll see you guys in tomorrow's video.